Let's talk about credit, things that you should consider prior to buying a home. First and foremost, credit is your financial passport to home ownership. Poor credit can affect your interest rate, the amount of money you need to put down as a down payment, and the cost of mortgage insurance. Excellent credit can get you a lower down payment, lower interest rates, and lower MI, lower payment, and more purchasing power. Poor credit has less purchasing power. Better credit or excellent credit has greater purchasing power because your payments are either higher or lower, which therefore affects your front end ratio and your amount that you're able to purchase. So, your credit score itself is the passport to home ownership. Some key points to consider: credit scores range between 300 and 850 on the mortgage credit report models that are used by most lenders. Keep in mind, the highest category is 780 to 850. Every 20-point increments below 780 can impact your interest rate and the cost of a mortgage. So 780, 760, 740, all the way down to 620 for conventional financing. So if you get an automated approval at 620 and above, you're good to go. But at that lower end of the scale in the lower 600s, your mortgage insurance could be greatly higher. FHA goes down to 580 and the mortgage insurance is set. You still need to get an automated approval at 620 and above. So FHA, you probably have a manual underwrite at 580 to 620, but it means that you still potentially can buy a home. And the FHA mortgage insurance is at a flat fee versus a conventional goes off of credit and is much higher. So if you're a person's that you're on that lower scale of 620, FHA is probably a better deal than conventional. But if you're at a 780 credit score, the mortgage insurance is extremely cheap on a conventional. So depending where you're at on the credit scale will dictate whether you go conventional or FHA. VA does not actually use the credit score as a basis of getting qualified. They don't have a minimum credit score. They look at how many accounts you have that are current, and then there is a manual underwrite between 580 and 620. Once you get above 620, if you get an automated approval, you're good to go. 3 tips on credit. One of the biggest tips is know your credit. You can go to annualcreditreport.com, get a free credit report from each of the bureaus one time a year. So there's 4 bureaus, you can get one a quarter, and you can check on your credit. If you have anyone pull your credit for an auto, home, whatever the case may be, ask what your 3 credit scores are. Know exactly which ones are which. My Experian is this, my TransUnion is that, my Equifax is that. Know that like the back of your hand. If someone pulls credit, you want to know the information, especially if you're shopping multiple places. If you're going out for a mortgage and you're shopping interest rates, if you called me and said, I just had my credit pull, I went to Rocket, here are my 3 scores, I'm probably not going to push you to see your credit score as much as I can give you a quote based upon that information that I feel that you know is correct. The next thing that you should do is also go to donotcall.gov, put your name on that list. That will protect you from trigger leads. When you do have your credit pulled, you won't get 50 text and phone calls from that information being sold by the bureaus. Last but not least, go to optoutprescreen.com. That will stop all those pre-approval items coming in the mail, which protects you from people trying to steal your identity by getting those pre-screened items. Let's get into some factors affecting your credit score. 35% of your credit score is your payment history. So late payments hurt your credit scores uh, uh, immediately. Okay, so set up auto pays, but make sure that those auto pays you verify those. A lot of people will set them up, forget about them. Credit card expires, and then because they wanted to get points, and then all of a sudden they have a late payment. There's not an excuse if the auto pays don't pay. It's still your responsibility. Okay, so make sure you're verifying those. Um, the other thing is, make sure that if you cosign, which I do not recommend anyone cosigning. I can't tell you the number of times I've had a parent cosign for a child, and they end up not making a payment, not telling, "Hey, uh, mom, dad, I'm a little behind. Can you help me? I don't want to ruin your credit." Of course, the parents are going to help. If you're in that situation, your parents are going to help you. Try not to ruin someone's credit if they've been gracious enough to co-sign for you. Okay, just communicate. Next, utilization. 30% of your credit score is utilization. So if you have a $10,000 credit limit, and you use more than 30% of that and you roll that, it's going to start hurting your credit. So try to keep your credit card balances at 30% below. And if you can also get installment loans down to under 10 payments, that can also help your DTI and your credit score, help you buy more home. So if you have two credit cards and one's maxed out, if you can roll some over and get both of those balances under 30, you're better off. So there's also a thing called trending data, and they're looking at how much you're paying. If it says credit card minimum payments 250, try to pay 275. If you pay minimum of 250 and that balance goes from 2500 to 3000, they look at that as, hey, my client might be in trouble. Their balances are increasing and they're going to be monitoring that. So they look at trending data over a 24-month period. If the trending data says you've paid that off every single month, then that payment won't have to be counted against you. Okay. Credit age. The age of credit is 15% of your score. So mortgage lenders are looking for 24-month, typically four accounts with 24-month track record. If you're somebody that's rolling credit card debt over to a zero credit card loan, make sure you're not closing out that credit card that you have good credit history on, 12 months, 24 months, 10 years for a brand new card. That just destroyed the fact of your good payment history if you close those out. So don't close out good performing credit debt, especially prior to making a home purchase. Last but not least, credit inquiries. A lot of people will ask when it comes to a mortgage, if I'm shopping rates, if I have my credit pulled by multiple places, will that be a credit pull on each and every one of those? The answer is no if they're within a 30-day time frame. So you can have multiple credit pulls, and I say do it within the same week. Um, but make sure each and every one of them that you ask them, what are your three credit scores? Highly important. Someone pulls your credit, that you ask for what your scores actually are. So those are my biggest tips when it comes to credit. And if you have any questions, give me a call. I do business in Virginia, Maryland, D.C. My name is Kevin Retcher, owner of First Meridian Mortgage. Been in business for 28 years. We're happy to serve. To all the Marines out there, I say Semper Fi. I'll talk to you soon.